One smart way to grow your super is through salary sacrifice contributions. With salary sacrifice, you choose to give up part of your before-tax salary and pay it directly into your super account. This can help you grow your super more quickly and save on taxes. Salary sacrifice contributions lower your taxable income, which can help you avoid higher tax rates. Plus, you pay just 15% tax on these contributions, which is often less than the tax you pay on your income. Another way to grow your super is through personal after-tax contributions. These can be made at any time from your after-tax income and generally don't incur additional tax when paid into your super account. If you make personal after-tax contributions, you might be eligible to claim a tax deduction, reducing the effective tax rate to 15%. To help explain this a bit more, let's meet Sandra. In February 2025, Sandra decided to start a bookkeeping business from her home office and registered as a sole trader. Sandra decided not to make regular contributions to her Vanguard Super account because she figured that as a new business, her income may be a little up and down. Towards the end of June 2025, however, Sandra's business was doing well, and she decided to make a personal after-tax contribution of $5,000 to her Vanguard Super account and claim a tax deduction for it. Sandra will need to make the personal after-tax contribution of $5,000 from her bank account using BPay and let Vanguard Super know she intends to claim a tax deduction for the contribution by completing a Notice of Intent to Claim a Tax Deduction form available in Vanguard Online. Sandra must do both of the above things before 30 June 2026. We hope this information has helped you understand the basics of superannuation. For more information, visit our Vanguard Super Learn Centre at vanguard.com.au/super/learn or contact us directly on 1300 655 101.